Hi, this is Jay Norris, host of Live Market Exercise at Clovernest.com. Welcome to the report. Before we get into it, I do need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're going to be looking at are real-time market snapshots and may not be replicated going forward. First market we're looking at is the Australian US dollar. You can see the short-term trend remains lower here. However, what's interesting about this market is your weekly is still up. You're still above the white line there. So technically, weekly up, daily down. That's a counter trend market. That's a market that's susceptible to swing trades in either direction. Kind of hard to get traction when you're counter trend between those two time frames. I also need to remind you that coming up on the middle of the month now. Happy Valentine's Day to everybody. Today's February 14th. Tomorrow's the 15th. What's significant for financial markets is that on the 15th, along with on the first of the month, we tend to see asset class flows coming into the market. This being an asset class market that could be supportive. I think it's somewhat telling that you haven't been able to close below the significant par level now. 3 times in a row they got below par. They couldn't close below it. That's going to be something to watch. So let's keep an eye on this guy. They had it on the ropes. They couldn't quite do the technical damage I thought they could have. I mean, we were all hoping. I was hoping personally for a sell-off because if I like this market at par, I love it at 90, at 95. So I was hoping you get a correction. You haven't yet. Clock's ticking. The longer it takes to break that market, the more that favors the existing trend, and that's a bull. Hey, next market we're going to cover is the Euro US dollar. Okay, there we go. The Euro, they continued to hit the Euro. More downside for this pair. No surprise, you did shift the daily, and you had plenty of room down to that weekly line. Technically, however, you still are in a counter trend market, so kind of hard to tee off on a market where technically your weekly trend is still higher. And you've got a lot of room on either side of this market. So it's definitely the weakest of the majors, though, and we can continue to look at that. I think anytime the markets start rolling over, given a sell signal, you want to take a look at the euro here. Hey, short-term trend down on the daily. However, as I said, the weekly trend is still up. So, here's another one where I think it's fairly bearish. I think your long-term price pattern favors the downside. However, as long as that weekly is up, let's face it, kind of hard to tee off on her. Let's do a retracement here and see where. This market loves 50% retracements. I suppose we could put that one on the chart for you. Yeah, it's right at 33.58, so we'll mark that. Watch 33.58. Close enough, 33.60 approximately. There you go, and when you see a purple line on my chart, that's a 50% retracement. So we'll mark that. So potential support down there. I'm pretty bearish on this market, yes, but experience tells me it's awful hard to tee off on it while it's above that white line. Next market, the British pound. Despite that short-term trend having rolled lower, this market continues to hold up pretty well. Yeah, he actually closed in the green today. Kind of disappointing. I'm sure the bears are a little disappointed they didn't take it to this market a little bit harder. I'm trying to come up with a trend line here. The past couple of days, you really had, you had the dollar much stronger last week, and you really couldn't do a lot of damage to this market. I think that trend line is probably a little bit premature just yet. Pretty shallow retracement also. However, the short-term trend is down. It's another one. I sound like a broken clock, but I'm sorry. You can't. It's hard to tee off on a market where it's above that white line. So the weekly's up, the daily's down. Your weekly and monthly are your counter trend to each other also. And the counter trend markets are susceptible to shifts on that 4-hour and even that hourly chart. If a market's trending, I really don't pay much attention to hourly shift. Counter trend market, however, you have to, and that keeps a lot of players on the sidelines. Hey, let's look at dollar CAD. I know I haven't been highlighting this market much lately. And here we go. There's dollar CAD. Not a whole lot to look at, it's a bear market. It continues to not be able to hold rallies. You got above par briefly, got knocked back down, potential double bottom, getting knocked back down. You're taking that away from you. What's happening now is the U.S. stock market's rallying back. U.S. stocks did find support on a long-term trend line. Here, we'll show you that momentarily, but let's get through the majors first. The Dollar Chief. Dollar Chief starting to sag back. You had a potential pretty good move. You had a pretty good move last week. And now it's starting to give it up a little bit. It's holding its gains okay. Short-term trend in the daily still higher. However, resistance up around that Jan high, though. You haven't really, you have a potential double bottom here. You're going sideways now, which from a technical standpoint, we could say there's the possibility of a reversal of the long-term trend. Remember, a trend can shift. It doesn't have to shift from down to up. It can shift from down to sideways and then to up. So that's probably what you have in the cards here. We've been saying for the past couple of months we're probably in the process of putting in a big drawn-out rounded bottom, and I think that is the case here. However, keep in mind, you're still down on the monthly, and here's another guy. He's susceptible to a shift on the 4-hour trend. You're not so concerned with that 4-hour when you have the monthly, weekly, daily lined up for you. But when it's not, when things are a bit in flux, you're still in a counter trend market, you have to be mindful of those long-term intraday time frames, such as the 4-hour. That's the story in the Swissy. Here's the dollar yen. There's the dollar yen. Boy, this market's holding its gains pretty well. I would have thought with that little range you had on Friday that you would have challenged the low of that. You did not. And, well, you took it out, but you closed above it. So, this market, we have to keep an eye on it. You could get a big move in a hurry if that market moves on 85 the figure. You bust above the figure there, 85 even. I contend you can have a big move. So we're all watching that. Here's your trend line, which it appears you're above it now. Look at that. The weekly's up now. I'll go back to that daily chart. You take out that maroon monthly line, and that could be a dandy on the upside. So dollar yen, we're watching that. Interestingly enough, when you're at the middle of the month, you're anticipating asset class flows. We'll see if the dollar kind of tags along. Dollar yen kind of tags along. It no longer is an asset class market, and that really explains your long-term weakness in this market and why it broke the relationship between the stock market and dollar yen, which used to be such a tight correlation. Why that is no more. There's no more yield on this pair, so really the characteristic of that market changed significantly. That's what's interesting about currencies. When you lose a yield there, it very definitely can change the characteristic of a market. But what's also interesting about the currencies, unlike commodities, is that currencies, they're really not. You're going to have power laws to a degree. That is, if volatility increases, it leads to further volatility. In commodities, though, you're really susceptible to power laws, and you saw that most recently where corn could struggle from 4 to 5, but once it clears 5, boy, it's a quick trip to 6. And it could struggle from 4 to 5, but once it clears 5, man, boom, it goes to 7. So in commodities, you can see these really outside moves, these outsized moves, big moves when volatility kicks in. What's nice, I like about currencies is you don't tend to see that. I mean, the Aussie dollar, let's face it, it's not going to go from 100 to 300 like corn can go from 250 to 750. You're just not going to see moves like that with the currencies, and I like that. You don't have to worry whether you're looking at whether you should be viewing the chart on logarithmic paper or not. So I'm a big fan of the currencies. I spent a lot of time on the commodity side, however. Hey, let's take a look at the U.S. stock market quickly, and then I'll show you that trend line in the bonds that slowed down this dollar rally, and then we'll wrap it up. There's the U.S. stocks. They continue to belt it out on the upside. Very, very powerful market. You just have to get out of the way. I think you could be in for the mid-month. The mid-month asset class flows is everyone with the 401ks. When everyone gets paid, the money kicks in here into the blue chips and other asset class markets. So let that rally play out. And boy, this is one strong market. This is a bull market. Hey, I'll show you the bonds real quick and we'll wrap it up. Here's the Bondoleros. I'll show you the long-term trend line that stepped up. Let me lose that daily directional line there. Just connecting this point and that point, and look at that, bam, right on it. And I'll go back to the daily, and that was, I think last Wednesday you had a change of direction candle there. Yeah, last Wednesday, Thursday, Friday, Monday. You had that turnaround there, and it's been placed already, and it shifted to short-term trend higher on the daily. So you went counter trend. All you did was you're going counter trend. As I was saying, in a counter trend market, you want to heed that 4-hour chart. So you could see that when the 4-hour chart, when the daily shifted, that made that 4-hour chart all the more significant. So today you had upside in the bonds, and we'll see how short-lived or not that rally is. But when bonds go higher, interest rates go lower. That's dollar bearish. So that definitely squelched that budding U.S. dollar rally we had. And the heads up was that turnaround candle here, that bullish engulfing candle, or that change of direction candle right on that long-term trend line. So you have to heed that. Hey, thank you very much. My name is Jay Norris. I'm host of Live Market Exercise at Clovernest.com. We have a lot of fun. That's where our clients come in a go-to meeting environment, a webinar environment, and we cover live markets into London and U.S. sessions. We do that Tuesday through Friday, and it's a lot of fun. Hey, thank you very much. Come and check us out, and I'll be back here with you tomorrow.